wide range bar form out of a base, I interpret that as prices igniting a move in that direction. And I'm looking for a continuation. That's my bias at that point. How it happens, I don't know. Right? Sometimes when you get a consolidation like this, the only way to get in is to short it below the low of the wide range bar. Of course, that means that your stop has to be up here. I've seen situations where they just keep dropping. I've seen others where you get a 1, 2, 3, or you get what I refer to as a 1, 2, 3, 4, which we'll look at. Sometimes you get a PSS like this. You just don't know. And you know what? Sometimes we don't get in because of, the size of the bar and where the stop is, and I don't have an answer to that. In that, if we don't get in, we just get left behind watching, and that's okay, because I don't want to take the risk of the stop above the high of the wide range bar, because I've seen those negated as well. I don't have an answer to that. That becomes a choice. If I put my stop up here, does it make sense based on the share size that I would have to use based on my account? Or do I get an alternative entry? Sometimes you wait for the alternate entry and you don't get it. We've all been in those situations. Right? Nothing you can do about it. Okay? Wide range bar. After an extended run, multiple bars, it is signaling the end of a move. It brings to mind in the PMTR one morning, we were looking at the futures, if you remember, those of you that were in there, and the futures were moving down pre-market, and we got, just like in a similar situation as this, the wide range bar, and I guess that was like 9:15 or so, that ended the move down, and prices began to rally back up and continued to do so at the open. Okay? The second PSS here, sure. All right. Again, here's your first one, obviously, and here's your second one. Okay? And it was right in an area of a prior reversal. Absolutely, it's tradable. That's okay. The trend is down. And when we look at support and resistance, right, this is a reference point. That's what resistance is. It's a reference point where sellers took control before, and my assumption is that sellers are going to show up there again, and then I look for a pattern that confirms that. Okay? So in this case, here is a little PSS with a little bearish chaining of the guard, and then our entry is below the low. That triggers it. Then we see what's going to happen. Okay? The closer this is to a reference point to the left where there's going to be support, the greater the likelihood of stabilization. I say this in every seminar, that I do the TPM to. I talk about candles. Patterns, markets move between reference points of support and resistance. Traders bid at support, they offer at resistance, and that is the most simplistic way of understanding what trading is about, and how prices move. They move between reference points. And what we do is look for a reference point to sell against in a downtrend, and then look for a pattern that confirms that it's happening. And with everything that we talk about, right, and cover in the classes, it boils down to that. Right? Looking to sell against a reference point in a downtrend, and look to buy against a reference point in an uptrend, and everything else helps to increase the odds of understanding what's happening in a trade, a profitable trade. Well, on the right side, ski bum, this bar right here says that it's going to go up. All right, so when prices are moving down like that, and they form a pattern like this, you have to decide whether you want to trade against this move. But this could be in an uptrend in a higher time frame, all right, which would then make this an okay pattern to trade. I mean, if all trends are down and you see a pattern like this, do you do counter trade, setups? But what setup is that called? This one here? This is a W bottom. Right, that's a W bottom. So, okay, 1 second. This is a W bottom. This, here's the concept from the TPM2. Prices move down. There might be nothing here to the left. Okay? So, in the support and resistance section of TPM2, we talk about creating support. A pivot low begins to create support where there was none. Right? What is a pivot low? By definition, a minimum of a bar with two higher lows. Right? I know, I was just explaining this here to Ski Bum. And so this created a low, and this becomes a new reference point when prices come down to it. The same thing with a PSS, right? The low that you're looking for prices to overcome because it's in a downtrend is a reference point where there are going to be buyers, and that's why taking a PSS after a climactic buy setup, right, is going to be less reliable, or one in which there's a greater likelihood that prices might get down there and reverse back up again. It's exactly what it would be, right? Failed PSS. Now, on the right, the one on the left here, there is no reference point to the left. You just got a wide range bar, but you will have traders looking to short a retracement. So, if we're going to get into looking individual bars as prices are moving up. You know what the topping tail means. You know what it looked like prior to completion. Right? You've got another bar. Remember, I talked about one bar anticipatory entry points and bars that had formed topping tails. Remember, I right over here. Let me change the color of that. I had spoken about a setup in which, and we're talking about a buy setup where I talked about a bottoming tail with a doji bar next to it. Well, here's a move up and a topping tail with a doji bar next to it, a 2-bar pattern. Second, 2 green bars. This one here, that isn't a pattern that I trade, or let's say jumps out at me as something that's saying I should do something here, because it's right in the area of this bottoming tail. It's too close to support. Right? I should have been in here. I should be in up here. So over here, I'm in the area of a prior low. I don't want to enter in the area of a prior low. I want to enter in the area of resistance if I'm going to short. Don't, I'm not saying you are, but don't think that every price movement is something that you should be able to trade. It isn't. There are specific patterns that we look at that that tell us when to act. There are, endless ways that patterns can form, but we can't trade every single one of them. So again, what we do, right, is get in next to a reference point of resistance, right, or patterns that create that resistance. So I want to get in after a retracement in a downtrend, and I don't want to get in near support because the likelihood of getting caught in a retracement or wiggle or just needing a bigger stop is going that's going to be the what's going to happen at those points. Back here. All right, so if you took the first one, right, I have to take you back to TPM2. Right? I don't know whether you took TPM2 or not, right? But we would trail stop. We would exit half of the position, right, if it traded above a prior bar's high, and then wait for it to pivot. Right? So when it gets down here, right, who's to say that when it got down near these bottoming tail bars, wide range bar or not, right? Who's to say that this reversal didn't turn into what's on the right here and it ripped right back up again? Right? We don't know what's going to happen. And so if I take half of my position off here and then wait for it to pivot and sit through this, right? That's what we want to do. Now the second PSS is up in resistance here. Okay. The second one is up in next to our reference point. Okay. It's retraced enough. It's retraced multiple bars up. Right? Again, I don't know what's going to happen. I don't know what's going to happen. Right? I'm just willing to press the button at that point. I'm not considering long, right, unless it reverses the trend. I don't know what's below here. Right? Again, we're just at this point, right, we're going over the concept of wide range bars. Right? Once we get through this next section, and we start looking at more charts with multiple bars and voids and so on, we can get into that type of analysis. Right now, it's about focusing on this concept. And at this point, right, you're saying this area here, right, this, when it came down here, this has been tested or used as a reference point. So it's done with. I know that this is something that many have trouble with, from the TPM2. In that, but this is how I have learned to understand prior areas of support and resistance. In that, once something has been tested, right, or used as a reference point, its reliability or its usefulness, its potency as a reference point has greatly diminished where it's been used. Right? So in a downtrend, right, you get a retracement, it's up at resistance, you get a changing of the guard, right, you short it. Of course, you're going to be looking at, let's say that this is a stock, and you're looking at, the concept of relative strength and weakness to the market. You're looking at market internals, and so on. All of these things increase the odds of your trade. Okay, let's continue. That's exact where our expectation is for the trend to continue. Right? The odds of continuation of a trend continuing, right, is high, right, until it becomes climactic, and it's in an area of support in the case of a downtrend. So we've got narrow range bars, right? We've got wide range bars. When we talk about bottom tails and topping tails, we want to take note of whether they're range expansion bars as well. Right? So narrow range bars, right, they're indicating that, right, momentum is slowed. And if we see that after a wide range bar, right, wide range bars, right, they are range expansion bars. So if we get a bottoming tail bar, that's also a range expansion bar, as we covered when we looked at those in the bottoming tail, topping tail slide. They tell us that there was commitment at that time. Right? So if I have multiple bars moving down, and then all of a sudden the range expands, and by the end of the bar, it's a bottoming tail bar, well, there was commitment to the downside. There was a lot of emotion associated with that. Right? Traders were convinced, the majority were convinced, that prices were going to move lower. And then demand came and pushed prices higher, right, and reversed. I'm saying if a topping tail bar, that's a range expansion bar after multiple bars moving up, there was a lot of emotion with that. Traders were going long. There was a strong belief that they were going to move higher, and it didn't. And it came back in, right? The odds of prices moving down have increased dramatically. Wide range bars after a continuing trend or multiple bars moving in one direction suggest the end of a move. Now, wide range bars, right, breakout or breakdowns after consolidations is what we want to see. And so if we buy a breakout from a base, right, and we're getting in above the base, I want to see a wide range bar. And a wide range bar, right, we're looking for that bar to close near the high of the range, which tells me that demand was strong into the end of that time period, and it should continue. It might stall. It might be a 1, 2, 3 pattern or some type of consolidation, and then we look for a continuation. Ideally, the next bar up is another green bar. But that breakout bar or breakdown bar, say, ignites a move in that direction, and we look for a continuation. So as we look at reversals, I want to take note of, how potent that reversal is. And when I say potent, I mean how far did it penetrate and close into that prior bar. So in this first example, right, it gapped up a little and retraced all the way to the top of the bar and closed above it. If you do anticipatory entry points, at the close of this bar with a PBS, that is what you would hope to see, and then look for it to continue to move higher. And so if this was a PBS, while we would say that that narrow range bar isn't potent, it is a tradable setup that we would enter on. In this example, right, there was a gap down to the bottom of this green bar's range. This is what we would look for, right, with gap strategies from a daily chart, right, where it gapped down to the bottom of a green bar. Right? Ideally, this is moving up multiple bars in a row. It tells us that traders have gotten caught on the long side and can produce a bar like this, right, based on that gap. We say that this one isn't potent, and because it didn't penetrate deeply into this green bar's range. Right? So the gap up brings in sellers, but by the end of the time period, right, it didn't penetrate deeply into that green bar. Now, as prices, right, are moving, right, we read the bars that are forming, and as the range expands, right, we interpret that as fear is increasing. Prices are starting to move in a way that are becoming climactic. It tells us that the majority of traders are convinced that prices are moving down. So as more and more become convinced in the trend, we can read that in the pattern that when we see a wide range bar like this, well, fear has now reached an extreme. The majority are sure that it's going down. They're getting out. There are very few buyers. And that's why the range expands like this. Whoever wants to sell, right, doesn't have those traders on the other side willing to take the trade. So as it begins to move down, those that were sitting on the bid, right, buying as this was moving down, say, well, you know what, this isn't reversing. Right? It is a picture of panic, absolutely. And so as traders recognize that the selling increasing, those that institutions and funds that were willing to want to get filled on the bid, and say that they're passive buyers, they're providing that liquidity, right? That demand to get filled. They're saying, you know what, this thing isn't stopping. Right? It's continuing to move down, and they begin to pull their orders. So the demand begins to diminish, and the supply overwhelms whatever buying there is, and that results in a wide range bar. And when I see that, I recognize that the odds are that, momentum to the downside is likely to stall. It doesn't mean that the trend's going to reverse. It just means that this is overdone in the moment. Now, this example, we have a wide range bar beginning a move. And so the momentum here is slowing down, but we don't have extreme fear. And buyers begin to step up at that point, and the downside momentum slows. So we want to look for PSSs at that point. We look for retracements, and then for the trend to continue. Momentum slows down. We say that greed is not extreme. The wide range bar down here ignited the move. The ranges begin to contract. Right? Look at the high with this bar here, how close it is. So then we're looking for confirmation, right? Which would be a red candle, right, in the beginning of a retracement, and the next PBS. Greed here has become extreme. Right? The range expands. Right? As prices began to move up, they began moving up. Traders are getting in. Right? They're still getting in. Right? They're apprehensive. Right? Over here, right, the demand begins to overcome any supply that's there. Right? Those that want to sell are saying, I don't want to sell. Right? This thing is going up. I'm sure it's going to go up. Right? because things get to the point where, all right, have you ever sold the low of a move? Have you ever been no? You're a lucky guy. I tell you, I have. You know, you've gotten into a position, and let's say, let's assume, you were long, and prices were going against you. Maybe you didn't take your stop, and as prices are moving down, yes, after such a move, exactly. Prices are moving down, and you're holding on, and it's like, you become so convinced because as prices begin to accelerate to the downside, that you just say, I know it's going down, right? So you hit the button and you get out, and prices begin to retrace at that point. Right? And I don't wish for you or anyone to be in a situation like that where you've experienced that kind of pain or a loss. But the value to that is that experience. You have lived the pattern. So when we look at these bars and I explain them to you, and their meaning, they become so much more meaningful if you've actually been there. So in a sense, you take the theory and make it real through experience. As prices are moving up like this, right? I've had plenty of traders get in, right, after a multiple bar move like that because it's so convincing that it's going up. Right?